Well, good afternoon, everyone, and thank you for joining us today. I'm Jeremiah DeGullen, the Insurance Solutions Advisor for the Center for Professional and Executive Development. And I'm excited to have you with us as we hear from Daniel Bauer and Justin Sydnor about artificial intelligence and predictive analytics and how these technologies are transforming the insurance industry. Today, I introduce Justin and Danny, but I'd like to share a few words about the Wisconsin School of Business Center for Professional and Executive Development, or CPED for short. CPED offers online and in-person programs and certificates that will give you the modern, relevant skills needed to advance in your career. All of our programs offer interactive learning sessions facilitated by instructors with practical, real-world business experience. CPED also partners with organizations to provide customized professional development programs, coaching, and consulting. For more information about the Center for Professional and Executive Development, visit us on our website at www.uwcped.org. If you have any questions during today's webinar, you can submit those questions using the chat or question and answer buttons at the bottom of your Zoom webinar screen. We will post questions that are submitted during the Q&A session at the end of today's webinar. I also want to mention that today's webinar is being recorded, and a link to the recording will be made available to you within the next few days. Now, I'd like to introduce Justin and Danny. Dr. Daniel Bauer is a professor of risk and insurance at the Wisconsin School of Business. He has a PhD in math and is an expert in actuarial science, quantitative finance, and insurance economics. He is the co-founder and director of the Masters of Business Analytics program at the Wisconsin School of Business and teaches the core course in machine learning within that program. Next is Dr. Justin Sydnor, who is a professor of risk and insurance at the Wisconsin School of Business as well. He has a PhD in economics and is an expert in behavioral economics and decision-making with a number of applications in the insurance markets. He teaches courses at the School of Business in behavioral science and risk analytics and the application of experiments and causal methods in business. Welcome, gentlemen. We're excited to have you with us today.
Good afternoon or good morning, depending on where you're joining us from. It's a pleasure to have you with us today. So we're going to talk to you about a little bit about AI and its relevance in insurance. And one of the reasons we're having this seminar is that the world has been changing, and that's not news to most of us, in the wake of increased connectivity. And along with it, industries have been changing. This process is sometimes called digital transformation. One way of thinking about it, and the way we're talking about this sometimes, is about a cyclical relationship. And that's what we're trying to illustrate here on the slide a little bit. The more we interact with our devices, purchase things online, drive our connected cars, etc., the more data we create, right? So you can think about all of us creating these massive amounts of data every day, right? Along with that, there have been great advances in computing and machine learning techniques, right? Think about cloud computing or Moore's law, for those of you who are familiar with that, which says that computers are essentially getting faster every year. These advances in machine learning and computing means that we can tap these data and create new apps and technologies on their basis, right? And these apps and technologies in turn create new data that can then be tapped and so on. This is sort of like the way we're thinking about this, this cycle. Now, the way we use data to create new technologies, right? Think about Siri, think about self-driving cars, or think about ChatGPT, is often broadly called AI or artificial intelligence. And what we want to talk to you about in the next 45 minutes or so is, number one, what AI means, right? How is it relevant? In particular, particularly explore its relevance in the context of insurance, right? Because that's what we know a little bit about. Now, AI is not a new thing, right? In fact, the origins of AI are often traced back to what is referred to as the Dartmouth workshops. And in 1956 at Dartmouth University, right, there were a number of like really smart guys, neurologists, computer scientists, and so on, coming together, and they sat together in a room and they conceived this notion of artificial intelligence, right? And they were really hyped up about it, right? So those are that's typically referred to as like the moderns of artificial intelligence. Now, the reason we want to talk about this is that back then, right, there was such a hype around this that in fact they overshadowed it, right? So the reason we're bringing this up is that back then, these researchers envisioned a future, right, where machines are going to take over a lot of it. And one of the members of those Dartmouth workshops, Marvin Minsky, who's a computer scientist, late computer scientist, right, said in 1970, well, in from 3 to 8 years, we will have a machine with the general intelligence of an average human being. Right? It was like this very, very aggressive pronouncement back in 1970s. Now, I don't know about you, but if I think about the computer I'm talking to you about or if you think about my little cell phone here, right? It's nowhere close to as smart as an average human being, right? And certainly that didn't happen in the mid 70s, right? So these gentlemen overshot a little bit. In fact, sort of like the objectives have been sort of changing over time, right? And there's a really good essay in that context by Michael Jordan, not that Michael Jordan, the computer scientist Michael Jordan, from Berkeley University, that is talking about artificial intelligence and that the revolution hasn't happened yet. And so what Michael Jordan makes, and it's a really fascinating essay, is that, well, when people talk about artificial intelligence, right, what comes to mind is sort of like Terminator, right, and like, Skynet making decisions. But really, most advances that we've seen to date, right, shouldn't be really labeled AI, right, that there is some kind of intelligent thought in computers that is competing with humans. Most of what is labeled AI today is actually what we call machine learning, right? So the broad majority of what people think of when they talk about AI is actually machine learning, and machine learning has a lot more modest goal, namely finding patterns in data and making well-founded predictions based on that patterns that the machine can find in data. Now, that sounds more modest, but it should also not be underestimated, right? Because as we all know, there have been sort of like these massive advances, and Justin's going to tell you a little bit about that.
Yeah. So, when we think about this idea that AI really just means making predictions, at first that might sound like, well, what good is that? It's not obvious that we make a ton of predictions. But if we start thinking about some of the use cases that have shown up in insurance, there's sort of a life cycle of predictive models from things that have always been happening in insurance, for decades now, to the more modern things, and then maybe to the forefront. And so, early on, we've had prediction models in insurance for a long time. All of our various forms of rating models. So all of the models that decide, what the rate is going to be, and associated models that are like underwriting models that score people as sort of a good risk or bad risk. And the modern techniques for that are making them potentially more powerful, and we'll talk about that as we go. But we've done that sort of prediction. What we can see now is that there's a rapid advance in things that we can call prediction. And in particular, you could see it with something like automatic claims payments. So if you think about an automatic claims payment process for something like an auto insurance claim or others, it involves taking in a number of different inputs from the individuals who are experiencing a loss, and making a very rapid determination of whether this is a claim that should be paid or whether it's a claim that needs to be investigated more. And that fundamentally is a prediction problem. We're saying, based on what we can tell and historical patterns of what we've seen before, is this the sort of claim that we typically should pay quickly and we know we're going to pay it, so let's just do it automatically? Or is this the sort of claim that needs investigation? Historically, that sort of prediction, we didn't think of it necessarily as a prediction, was something that human brains did. They looked at information, they were trained by others usually, picked up the repeated patterns, and by picking up on those patterns, they would get good and pretty efficient at figuring out how to route claims and which ones could be paid quickly. That efficiency that humans gained over time is now something that computers can gain very quickly with training data. And now computers can make this type of prediction and do it even, an order of magnitude more efficiently than people could. So that a share of what's happening now in insurance really eliminates that middle processing step that's costly, and a lot of things can happen very quickly. Um, we're now at the stage where prediction models have taken a leap, and they've taken a leap since around late October, November last year, with the rise of OpenAI and their publication of ChatGPT and related what are called large language models. And so most of you have probably seen a little bit of these models. What they are now able to do is make predictions based on patterns they've seen before, but now the patterns are not something very specific, like, is this an auto damage that we would naturally pay? But the patterns are patterns in language. And so they've been trained on a gigantic corpus of information from the internet with tons of reading material, essentially. They're a very well-read machine now, and that well-read machine can make a lot of predictions of what a good response might be to a prompt. And to give you a sense of the power of that, for those of you who haven't played around with it, and I know this has a lot of text on the screen, I'll kind of read it out for you a bit here. Yesterday, as I was sort of thinking about a good example for this, I typed a short prompt into ChatGPT. I wrote, can you write a short professional email that an insurance agent could send to clients with homeowners insurance suggesting some common additional riders for an insurance policy that the client might want to consider? Okay. That's a fairly specific kind of thing. ChatGPT came back with a suggestion that I don't think we'd want to use right off the bat. There are some holes in it, but it's well formatted. It understands what emails should look like. It can sort of make a prediction of what an email should look like. It doesn't understand. Sorry, I misspoke there, but it can make a prediction of what a good professional email can look like. And it can make a prediction of what we probably want for a response on things like common additional riders, because it's read enough on the internet to sort of have a Wikipedia level type understanding of a lot of these terms. So you can see it starts, dear client name, as your trusted insurance agent, I want to reach out to you with some information about additional riders. And it kind of goes on, and then it says, here are some common riders, and it mentions flood insurance, personal property coverage. That one's a little off here. Home business insurance, potentially kind of interesting, and umbrella liability insurance. Right? Most of our insurance agents would probably mention something like umbrella in the context of something like this. And then it kind of ends with a statement to get in contact with them if you're interested. Okay, so this is an example of a really powerful version of prediction, predicting the sort of email that a person could write. At the same time, though, it's important to recognize that this is still prediction based on historical patterns. It's not having deep thought or understanding of any of these terms. It's simply parroting back something that looks like what a person would have sent in the past. Now, it's doing that in a sophisticated way, but it's also helpful to see examples where it fails to understand that it doesn't have the ability to deal with what you might think of as a curveball. So, for instance, here I give it another prompt. I said, which weighs more, a pound of feathers or 2 pounds of bricks? Okay. Its response is, a pound of feathers and 2 pounds of bricks both weigh the same, which is 1 pound. The confusion in this question usually comes from the fact that the number 2 is mentioned in the bricks option, which might make it seem like it weighs more. However, the question states that the weight of feathers is 1 pound and the weight of bricks is 2 pounds. Therefore, the total weight of the 2 pounds of bricks is equal to the weight of the 1 pound of feathers. All right, ChatGPT is kind of ridiculous in this case. Now, why is it ridiculous? Well, it spotted a pattern. When people ask this question in the internet, it's always the riddle version where you're asking about a pound of feathers and a pound of bricks. So ChatGPT responded with the sort of answer we would typically see. It wasn't able to actually process and understand what we were really asking. Okay. Now, if we feed ChatGPT enough of these trick things, it will learn to spot that the pattern can be tricky, and sometimes it should say one thing, sometimes it should say another. So it's not like its stupidity on this question is a permanent feature of the AI, but I think it's an illustrative example of the fact that the AI isn't thinking or understanding. And so as we think about use cases, and I'm going to turn it over to Danny here to talk a little bit about those use cases, it's helpful to kind of recognize that AI is making extrapolations from what it's seen in the past and just pattern matching. It is not deeply thinking or creating an understanding of what it is you want to do, even these very modern and powerful seeming.
And that's exactly right. And that's a really good segue to sort of think about a couple of applications of AI in insurance today. And right, in the way we sort of like want to frame this, and the way that's helpful to think about this is, as Justin mentioned, thinking about making predictions, but as we sort of try to illustrate in this digital transformation slide, in a much more powerful way. You have more data, you have bigger computers, so you can make bigger predictions, better predictions. Right. So if you think about different areas of insurance, and we're just sort of going to go through the cycle here, right? Before you sell a product, right, you have to price it. Right. So one area like that, we've always used predictive modeling in insurance and actuarial science is pricing and making rates. Right. Conventionally, we use something called regression modeling, right? You can sort of think about a spreadsheet, right? We had historical data on people, like their age, the type of car, their claims history, were they good risk? Did they get in a claim before? Or did they have a claim before? Did they get into an accident before or not? And then we had observations of whether they had an accident or not, right? And then we could use this historical data to say, well, if a new customer comes in, that customer kind of looks like those customers, and those customers had a chance of getting into an accident every year of maybe 0.5%, right? And then we would price insurance based on that. Now, we're still doing the same thing today, but these richer data sets, and these advances in modern computing allow us to tap much richer sets of data, right? So think, for example, about having an app that sort of tracks how you're driving and where you're driving. Now, suddenly, rather than just taking like information like your age and whether you drive a Corvette or you drive a Volkswagen, right? We can take into account how fast you're driving, how often you're driving, how quickly you go around curves and so on, potentially providing a much more accurate score of the chance of you getting into an accident, right? This obviously has advantages because we can price insurance more accurately, right? So that means individuals will pay their fair share, right? And potentially also will take more appropriate actions, right? If I know that, speeding and, going fast around curves, right, will lead me to pay more insurance, right? Sometimes referred to as moral hazard, right? I might be a better risk and not do that so much. Now, of course, there are a lot of challenges going around with that, right? So the insurance company knowing where we are at all times, right? And potentially, some people are just living in different areas than others. So maybe in that areas, it's not as easy to drive safely, right? So there's a whole lot of issues that opens up, and we will have to grapple with those issues, right? And there's also a question of regulation, right? If an insurance company tells the regulator, well, our rates are based on a black box AI model that says your risk score is 3, right? That might not be very satisfactory. And so there's a lot of issues that we have to sort of grapple with, but fundamentally, right, we're just making better predictions, right? This is an area where we sort of like traditionally have made predictions. Yeah, actuaries have done this for a long time. Now, as Justin mentioned, there's also a whole bunch of predictions, right, that humans used to make, right? And one really salient example is to think about insurance sales or agencies, right? Traditionally, right, you went to an agent, you told them your needs, based on your needs and some interrogation, right, the agents recommended a product, You can think about this as a prediction problem, right? You're feeding the agent information on your needs and your wants, right? And they come back with a product. Now you can imagine, right, in a digital age, a computer taking over some of that, right? So you think about ChatGPT, interrogating you what kind of coverage you want, right? Again, you can sort of like have a little bit of a feedback, and and quickly process also adjustments you need, right? This could lead to an improved customer experience, right? There's no waiting around for the agent. You don't have to go to the agency. You don't have to call and get a busy signal, right? Because you're essentially talking to bots. It also means that you could call, like at 3 o'clock in the morning, right? So say at 3 o'clock in the morning, you think, hey, I'm going to travel tomorrow. I want to up my coverage because I'm taking my trailer out, right? You can call a bot up at 3 o'clock in the morning. That might not be possible with the agency. Now, there's also challenges going along with this, right? And this is something we're going to come back later on. Namely, agents are humans, right? They have some empathy, they have some broader understanding, maybe they have some background information from you, right? So if they feel that you don't understand the product that you're about to purchase, right, they can intervene, right? That's something that computers can't do at this stage, right? Because they don't have empathy, right? And that's something that we're going to come back later on. Now, if you purchase the insurance and say you got into insurance claim, right? Traditionally, again, you picked up the phone, right? And you called an agent or maybe a call center to tell them about your claim, right? So that's typically referred to as claims reporting in the industry, right? Now, if there's in a call center, traditionally there was a human that asked you some questions and then filled out some text boxes, and maybe had some flags and so on, and that was the claims report that's going on. Now in a digital age, rather than have been interrogated by a human in a call center, you can imagine sending in, and a lot of insurers are doing this already, sending in pictures of the accident, right? The pictures will be picked up, right? You might have like a quick menu where you can describe it, but a lot of times if you have a picture and a quick description, that's already enough to get the claim uploaded in a claim system. Again, right, the way this works is seamless, right? It will in the cloud immediately be uploaded. It could be potentially auto-processed, as Justin mentioned earlier. Some claims, right, if they seem pretty obvious, right, you could get your money within 30 minutes, right? And that happens, and insurers are advertising with that. Now, one challenge right now, right, this seems like a cost savings approach, but in a world where some people are calling in the call center and some people are using these digital approaches, right? Right now, this might not necessarily be a cost saving, but more cost add, because you have to offer both services, right? Because you have sort of like multifaceted customers that want it all, right? And there's also challenges regarding IT, right? So a lot of things that we hear when talking to people from the industry is that legacy systems make realizing such ideas that are relatively basic and in principle rather difficult, right? Finally, right, so once the claim's reported, right, you need to process the claim, right? So now conventionally, right, think about homeowner's claim. Conventionally, you had an adjuster go out. Again, the adjuster probably, has an iPad, right, has to check boxes, has to take a couple of pictures and so on. Right. In a modern age, you can imagine, right, an insurer having an army of drones out there. As soon as somebody reports the claim, the drone flies out, right? The drone takes a couple of pictures, right? Uses that in conjunction with the information filed by the policyholder in the online system, right? And comes up with a claims report and decides on how much the claim should be, what the damage is, and so on. Again, right, this could lead to an improved customer experience. They might get their money a lot quicker rather than having to wait for a claim adjuster to come out. It could be more accurate, right? Because think about a fire or a hailstorm, right? You will be able to look at the damage right after the hailstorm if you have like sort of drones fly over. It could also be potentially cheaper because you cut out the human, even though at this stage, again, right, it's unclear of whether there are a lot of cost savings because it will require a good amount of investment, right? There's also some challenges associated with that, right? Given that you had traditionally this labor force of experts that were going out in the field, what are you going to do with them as an insurance manager? And also, like, are we comfortable with the idea that there's continuously drones flying over our house and checking everything we do, right? So, like, going skinny dipping in the backyard is going to be difficult to with that, right? All right, Justin.
That sounds like a very you problem, Danny. So a little bit of synthesis here on, if you think about all these examples Danny just gave and start thinking about how would you classify how you might spot some opportunities within your organizations, within sort of insurance businesses, there's a couple of classes of things that are maybe worth highlighting. So there's clearly the ability to improve existing prediction models. So if your organization is already running models that create scores of some sort, whether that's pricing or otherwise, they take historical patterns of data and score things. Those models can potentially be made more and more accurate using modern techniques. And most insurance companies with decent scale and data science teams are doing a lot of investment in that. The next wave, and this is where I think a lot of the current kind of exciting investment is to recognize that there are data sources that used to really require human intervention. So if we think about things like text or images or videos, so if somebody was talking to you, if somebody sent you a picture, if there was a video of something, it could only really be processed by human eyes prior to the last decade or so. Those increasingly and with a lot of rapidity can be processed by computers. And that reduces the need for human intermediation in routine, but sometimes complex tasks. So if there's a task that people get good at because they know when they hear something or they see something in a picture, they know what that is and what to do, computers increasingly can process information in similar ways and be used to kind of take out the human in that part of a loop. There's also this next wave to start considering with things like language models. Where can we do more by allowing people to interact with language models and using AI that's good with spitting back out kind of predictable language? So this might be better chatbots with more back and forth and ability to refine queries. But it's also things like ability to translate notes to polished text or improve transcription. A lot of places where we have people trying to take things that are, say, in note form or sort of partial form and then produce it to other people, whether that's communicating via an email or recording things. Those are opportunities now that maybe didn't exist before. I think one of the things we want to emphasize on this webinar, though, is that as you start thinking about use cases for your organization, it's really key to be locked into the underlying value proposition that could potentially come from any of these investments in using AI. And we typically sort of boil this down into three kind of broad categories. So there's value that comes from customer experience in the form of reducing hassle, effort, uncertainty, and bad surprises for customers. So you can make customers happier by improving any of those things. And if you can do that at a low additional cost, you've really improved value. There's then obviously the ability to lower costs. And here, a lot of lowering costs is going to come from ways that you can make your sort of human workforce and sort of the labor cost of an insurance industry more efficient so that you can get more throughput with the same inputs of people. The more that you invest in technologies that allow that, the more you can lower the cost of any given insurance product. And we know there is a decent share of the cost that goes in that direction. And then the last thing, and we've seen a lot less of this yet. So far, I would say what we've seen is that the AI efforts in insurance are really on those first two buckets. The last bucket is also potentially very important, and it's finding new ways of reducing risk, covering risk that people have had that in the past has not been well covered. There are some forays into that in thinking about like on demand and things like that, and also a host of things where people are starting, especially in insurtech spaces, to invest in ways of using technology to help prevent damages and prevent risk, so going just from reimbursement to prevention. But there's been less of a sort of large scale shift in that direction yet. It's important too for organizations to try to think carefully about where those investments should go based on their underlying strategy. So there's, this is a kind of matrix that's often put up in sort of business school environments of trying to think about where your organization lives in a combination of whether you're trying to be industry wide or you have a focused niche, and whether you're mostly doing a low cost play or if you're doing a differentiation play. And so if you think in the insurance industry, you could think about Geico as kind of being up in the upper left-hand corner probably, and Chubb with their sort of focus on higher net worth customers being more down in the bottom right, at least in property casualty sort of space. And so, those different spots suggest different emphasis either on the protection of risk and the consumer experience, if you're sort of down in that bottom right corner, versus really focusing on the cost savings if you're up in the upper left. Now, as we kind of reach near the end of our prepared remarks here, we wanted to talk a little bit about, okay, we've talked about these things. To what extent is there a fundamental disruption going on in insurance? And, one way to think about this is to what extent is AI giving us a kind of blockbuster brick and mortar to Netflix streaming in the cloud kind of revolution of the entertainment industry we saw? To what extent are we seeing that in insurance? And here you really want to think there are some startup players in the insurance industry, for instance, in the property casualty space, that have really tried to launch with a very AI-centric business model. So the Lemonades and Hippos of the world, if you will. And the interesting thing is they're making investments in trying to use AI in place of people wherever they can, because their advantage is they don't have legacy systems, but they also don't have people. So they're trying to sort of provide a low cost and well-designed customer experience through these things. Now, one of the things those who follow the industry will notice is that there was a lot of excitement about these early kind of startups in this space a few years back. But in recent years, over the last year or so, if you follow stock markets around these types of companies, so we got Lemonade on the left here and Hippo on the right, they've both fallen quite a bit. And I think that suggests there's a sort of waning of the initial hype and enthusiasm about just how quickly these kinds of companies could catch on. And I think it's helpful to think about why it may be challenging to fully automate insurance. Like, why are these sort of startups struggling to gain really massive traction? And I think there's a couple of fundamentals to the economics that make insurance different than some other industries where you can see just rapid growth, especially in web platform type space. One is that there are high costs of acquisition. So you think of all the money for advertising and brand awareness. That's a hard space to break into. And so far, AI has not made huge advances in lowering that cost of acquisition. That's not to say it never could, but nobody's quite hit on that. There's also in the insurance space only what we would call moderate economies of scale, unlike certain web platforms. So if you build the right web platform that everybody uses, if you build Twitter, for instance, initially, you have a big fixed cost of setting it up, but then every additional user who starts using it just generates scale with no meaningful additional variable cost. You're never going to fully see that in the insurance industry. So there is some spreading of fixed costs by having a stable risk pool and so on, but there's always going to be some sizable variable costs from claims and the need to have a capital backstop as you grow the size of your business. There's also a need to navigate regulation, and so far, players have not really found a good way of doing that without human expertise. Also, you're selling a complex and imperfect financial contract. And at a very root level, if you think back to my example of throwing the curveball of the feathers and the bricks, AI in its current form is good at extrapolating for the common use cases. It can gain efficiency for things we do repeatedly over and over again. But it's whenever you hit the unique and complex case where you need an understanding and ability to think through and problem solve that you run into challenges. And those challenges can be quite big if you're trying to start up without that sort of ability to handle those things. So at some level, for those of you who are in the insurance industry, I think some of that suggests that, the incumbent players in this space are not necessarily on the brink of disaster. And we see a lot of investment by most of the large incumbents in a lot of areas of trying to leverage these things. And probably the most important mental shift that uh, we can have in sort of thinking about where some of the very early efforts in AI and insurance versus kind of where we think things maybe are going in the near term future is to think about the intersection and the interaction of people using AI tools to be more efficient and effective, rather than thinking about fully replacing humans with AI in a whole large range of things. There are going to be a few cases where we can really just eliminate large swaths of human intervention, but it's much more likely that AI is going to make big advances in the near term as a way of making people more efficient and freeing up their time to do the things that humans are especially good at relative to machines, which are, as Danny mentioned, things like empathy, the ability to sort of explain something to someone and to spot their emotional reaction and understand whether they're understanding, whether they're unhappy, and get out in front of that. A chatbot has to wait for you to tell it that you're angry. A person can spot it in real time. Um, it also, people can engage in this problem solving, so freeing them up to deal with the problem solving, and we're seeing this in a number of industries, and I think that's a sort of big movement. And so, we'll leave it off here, I think, with our main comments, with this desire to kind of think about an intersection of artificial intelligence making humans stronger. It's not that that's not going to be a disruption to our workforces. Things are going to change about what we need to do and how jobs are done. But the more we can think about this from the lens of interaction and get the people who are involved currently in delivering services, both internally and externally facing to clients, the more we get people involved in using AI to make them more efficient, rather than having an outside team of data scientists who's trying to develop a model that replaces something that people do, the more likely we're going to get real efficiency and real benefits from AI in the near term. All right, so that finishes our prepared remarks, and we want to leave a little time now for some Q&A. And I know Jeremiah's been scanning the Q&A as it comes in, so you can tee us up with a couple of questions here.
Yeah,
Yes, thank you, gentlemen. I appreciate.
Yeah, Jeremiah, maybe you want to answer that very recent question, whether that deck and recording will be accessible after this live session.
It will be, and everybody will receive an email with a link to the recording. So great question. Thank you, Danny. All right. So, well, thank you both. That was excellent. With that, as Danny and Justin mentioned, we'll open it up for questions. Again, if you do have a question, we will take about the next 10-15 minutes here to run through some of the questions that were already submitted in the question and answer box or in the chat box. So if you have any additional questions, please feel free to submit those. But I do have one question here, and really the both of you can take a turn answering this, or if one of you wants to take it, but artificial intelligence seems to make it possible to use a lot more information to set insurance rates. But there also seems to be a concern about whether to include credit scores or other factors that, because of the potential for bias against minorities, how do you think about this tension?
I can jump in here, and I think this relates a little bit to Christopher's question here, who asked, like, with growing regulation being adopted or being drafted in the U.S., where do you see that either guiding or limiting AI adoption by carriers? And our sense here is that, like what Jeremiah just mentioned, that these issues around bias and fairness are sort of front and center here, right? So letting AI run loose in the insurance industry, right, certainly has some maybe troubling implications, right? So if there's a black box coming up with rates, like that could sort of like lead to a resurgence of redlining as we had it in the 1970s, right? And maybe extreme risk classification that will benefit some and not benefit others, and that could not be equal distributed. So I think there is so like a relevance to think for regulators to think carefully about how to deal with this. Now, as Jeremiah mentioned, a lot of these questions are around sort of like, what input factors to use, right? Should you use credit scores? Should you not use credit scores, right? And that's sort of traditionally a discussion that's been, at least in the regulatory space, been very active. We've seen that some other areas, if you think about public policy, if you think about the judicial system and so on, have sort of moved away from thinking about inputs too much, right? Because they realize that algorithms are so smart, if you feed them sort of like enough information, even if you don't feed them a certain information, right? They might use the other information to proxy for these hidden informations, right? So saying, hey, you're not going to feed the algorithm one feature, now one variable, right, might not do the trick, right? So in these other fields, what's happening more and more is that there's less of a thought about so like regulating the inputs, but more regulating the outputs, right? So thinking about, okay, so if you have an algorithm that produces certain scores, how, are those scores fair across different parts of society, right? Is the gain in efficiency from a certain algorithm worth the reduction in fairness and maybe the increase in disparity, right? So, and I think that's really one of the key things that we think insurers sort of like should think about, and how we think AI, like what we believe as sort of are the biggest challenges of regulating AI in the space. Justin, you want to add something here?
Yeah, I think you hit that one pretty well.
All right, thank you. So kind of along the same lines of regulation, we had a question come in that what impacts might this have on claims reporting and processing in other markets like health insurance, specifically with concerns around privacy and PHI? I'm not sure what that stands for.
That's protected health information. Yeah. So I think, I think if we think about health insurance, it's already very heavily regulated in terms of the rating side of things. And so my sense is we're unlikely to enter a world in which there's a big advance in individual level rating for health insurance. Because societally, we've sort of decided that pre-existing conditions and sort of the things that largely determine health risk are things that we're not going to price differentially on in insurance. And so I don't think there's the same sort of concerns we see in other markets where we haven't made those decisions about what's going to happen with AI in terms of the rating and that sort of privacy and bias thing. I think the kind of more interesting here is, as you sort of mentioned, I think in this question about the processing and reporting for health insurance claims. And here I think there's an interesting potential to eliminate a lot of scope for errors and eliminate a lot of need for sort of intermediation. So right now there's the sort of doctor facing side or the clinician facing side of what happens. And those clinicians order tests and make a whole range of things happen. And then that generates it goes to another step in the process to generate a claim to bill for the cost of that. That involves a lot of looking up procedure codes and matching it to the costs. A lot of that can be more seamlessly integrated, and I think there's a lot of efforts going on there with electronic medical systems. I think probably the most interesting question in the health insurance space is where all of this will interact with more of a value-based design, where rather than billing for each service and test in a fee-for-service system, that we're thinking about more bundled payments or capitated payments where the money flows based on a population or a set of needs. And there, I think there may be some interesting opportunities to spot patterns in populations of their likely needs for care, and to use technology to better integrate care needs. So when we see somebody gets this pattern of care in one spot, the technology can help us do a better job than any individual person might do in trying to understand where the additional care needs are likely to be. And so I think there may be a rise of this within that space, but I think there are some delays in doing that. Some of those delays may be related to concerns about sharing data across systems for private health information. My sense is a lot of those concerns can be ultimately overcome because a lot of these tools can be built within otherwise secure systems that of the type that we currently store that sort of protected health information.
All right, thank you, gentlemen. There seems to.
I'm gonna jump in here really quick because I think
Okay.
what Justin said in the very beginning here relates to Wade's question, right? So,
Yep.
and what are your thoughts about how AI trends may have on adverse selection or offering of group plans? And I mean, at least from my perspective, that's sort of like an interesting question, right? So, because if you think as and sort of Justin spoke to this in the beginning, right? As you think about better risk classification, right? That means people have to pay their a more accurate price, right? But that also means that there's less pooling of risk, right? So economists sometimes talk about this in thinking about the veil, right? Before you're born to relative to after you're born, right? So like once your genetic information is realized, right, which makes you maybe more of a risk for getting certain cancers and so on, right? That means if you could, if you think about life insurance, if genetic information could be taken into account, you should pay more for life insurance. Now, is that desirable from a societal perspective? And that's like less clear. But here is, I think we're sort of pools, like, and I think that's sort of how I interpret Wade's question, right? Where pools can be helpful. If there is a class of people you say you want to share risk with, right? So this is going to be your pool, and you say, hey, we're not going to heftily, can you think about them at an employer level, or some association level, people you feel some connectivity with. If you say, hey, in that pool, we're going to use sort of like relatively crude risk scoring, but we don't want to use like the very fine risk scoring because we want to give our individuals to the chance to pool their risks a little bit, right? And there being some transfers from people who are more fortunate, maybe in a genetic sense or in some other sense to the less fortunate, right? So I think that I think this wave of AI requires us to think more carefully about the intent of those pools. I think that's like one of the ways I would answer that question. Justin, does that resonate with you?
Yeah, I think that argument about thinking more carefully about the intent of pooling is going to be especially relevant going forward.
There's several comments here or questions around Chat GPT. To boil those down into one question. So it seems like there might not be, it might not work exactly the way that we want it to currently with it. There seems to be some challenges with math rules, and it doesn't necessarily understand the details about insurance, which I guess questions its usefulness. How do you see solutions like Chat GPT?
So I'll give a first stab at this, and then Danny, I don't know if you want to try to pick up this question about, why these sort of models may be bad at math and how that might be relevant. But I think one way of kind of recognizing this is that we're in the early days of this type of technology, and currently it's been trained in a very sort of broad brush way off of large corpuses of internet-based material. Increasingly, though, many companies are starting to get professional accounts with OpenAI and others and starting to try to feed the same underlying learning technology with more domain-specific examples of text and trying to train the models to spot patterns and create reasonable responses to their specific environment. I think there's probably going to be some really rapid advances in that space. So some of the ways in which ChatGPT could look very dumb if you tried to take it off the shelf and apply it as your insurance chatbot. There's lots of things it only knows at very superficial Wikipedia type levels. If your organization or enough insurance organizations have existing records of interactions between call service center workers or customer service workers or agents and people answering specific questions and dealing with issues that are deeper in the products, there's no reason to think that the computer can't learn to pick up on basic patterns in much more domain specific things. It's just an issue of actually doing the kind of data and learning task. And Danny, I don't know, do you have a good answer to the question of why these models currently are bad at math? I think partly it's that they're not trained to be good at math. That's
So I
not
think
their
that, yeah, so
job.
my hunch is that they're going to get better at math, right? And so I actually like, I've seen some examples of them doing well. I think you can sort of trick it sort of in the same way that Justin did, like, again, because they're sort of like making predictions. But I think if, like, especially with the rules-based stuff, I think that they will improve. However, and one thing to add here, and I think this sort of gets a little bit at Curtis' point too, right? So I think that the example that Justin provided, right, with that trick question was really suggestive, right? So in some way, right, one way to think about this is that, ChatGPT has the tendency to do really well, and other automated systems do as well, right? But they can also fail, right? But humans are typically pretty good at picking up these failures if you get them to engage, right? So one of these, and this is sort of like, I think what Justin was sort of getting at is this last slide, with the hands holding each other. Think about not AI versus humans, but think about AI and humans versus machines. And so a lot of people are thinking about that, right? So one way to sort of think about this is if you have like a Chat GPT supported decision to make, right? Rather than having if you have a human in the loop, right, that doesn't automatically get the input from ChatGPT and provides them to the individual, but maybe the human gets like the 3 best answers that ChatGPT produces, has to read through those 3 answers so that the human actively engages, right, and picks the best out of those 3, right? This way, you could sort of like, you'd have the human be very efficient with their time, avoid these bad surprises, right? So, and I think this is like one of these, so that there's a lot of people thinking about this, like, how do you make these automated systems better and still with a leverage the strength of humans? And a key issue is that you have to get the humans to engage. If you just use the human as a vehicle to transmit the signals given by the AI, that's not working well. But as soon as the human still has a choice to make, right, these tend to be reasonable well. Right? So I think that's right. So Curtis was sort of asking the question about the usefulness, right? I think that's sort of like one idea of how these things can still be useful if you sort of use the best of both worlds. I hope that made sense. Justin, that made sense, or do you?
Yeah, it did. And yeah, I think it did. And I think one of the other things I'm seeing in some of the questions that relates a little to this idea of kind of humans sort of responding or picking up on the issues is I think Curtis is asking a question in the Q&A about processing being a kind of core play in health insurance, but there's an ability of AI to identify anomalies in diagnostic assessments, and that's where we're seeing more opportunity. um, I think one way of thinking about this is that for a health insurer point of view, the unusual cases, the cases where there's something going on that seems like a potential problem. Somebody's being double billed, or there's some reason that some follow-up's not happening. The insurance companies increasingly, I think, can play a role in using their data to detect anomalies. And so the more you use not the sort of chat GPT style thing, but sort of other machine learning models that sort of score and sort of say, okay, does this look like what we'd expect to see next? Or how much is this a surprise based given typical patterns, the more you can then really direct attention of humans who can investigate. So I think the ability of using people to clean up the mess and to find problems much more quickly than we've done in the past could really be leveraged a lot using data in smarter ways. And it's not that the AI is going to know what the problem is or how to solve it, but it's that the AI can weed through, millions of claim records and help us spot the ones that should probably get people's attention because they're clearly not routine. There's something unusual going on.
Yeah, I'm going to pick up on sort of the thread that Justin, that we're on in the last two answers, and get at Carl's question. Carl's asking, what about using AI for reserving? I'm in health insurance, and I've been wondering whether AI could have anticipated a shift in utilization during the pandemic with any level of accuracy. I guess the question could also apply similar to auto insurance, right? And so here, again, sort of like, regulation is a system designed with a purpose, right? And right, so if the purpose of reserving, not regulation, reserving is the system designed for a purpose, right? If you think the system should be designed in a way to be most accurate, right, then maybe using better prediction could be good, right? But as if it gets more accurate and gets more black boxy, right, they could also be foul play, right? I mean, so like you could run different algorithms, and you post a reserve produced by the algorithm with the lowest reserve, right? So again, sort of like, I think what we need, and I think that's sort of where, again, sort of this human algorithm interplay is getting more and more important, is sort of like, people to think through these questions from a design perspective, right? What do I really want out of reserving, right? Is it better to be rules-based and so that, it's very transparent, right? If I want it to be more accurate, to what extent do I have to trade off transparency and accuracy, right? And how could I design that, right? So I think in this particular example of reserving, I think, probably corner solutions aren't great, right? So you probably don't want a system that gives up any degree of accuracy, right? Just to have like, simple rules-based system. You sort of see this with modern solvency regulation. But on the other hand, I don't think you want to go all the way to a complete black box, right? So that there's a lot of like room for foul play. We're seeing this, sometimes this is labeled AI snake oil in the industry a lot, that, some players are taking advantage of the black book character and trying to, to sort of like say things and pretend things by pointing to AI when really there's no content behind. So I think this is a difficult design problem where, again, I think humans have to engage and like there's judgment required how to trade off these trade-offs between accuracy and transparency. And that's a challenging problem, and regulators face that problem. But I think that, again, so like a lot of this sort of boils down to, right, to sort of like thinking more about like, like the interaction of these systems with humans and what they're supposed to do.
All right, we have time for about one more question here. And, I've in conversations in the past heard, with enough data, we can create a problem, or we can create a program or a product to ensure just about anything. And while it's a little tongue in cheek, that begs the question, what are some of those external types of data sets that the industry might be able to use to improve on those different models?
So, I think it's a really sort of challenging question. It's not obvious to me that there's a huge opportunity for new data in terms of setting rates. I think the really key thing would be to think about markets where we currently don't have a good market, right? So think about a market where it currently doesn't work well. So that may be some things like flood insurance or other places where we have risk, but the private market struggles to really identify solutions. Um, you know, if there's ways of at least spotting kind of cases where there's some intermediate level but not hugely correlated risk using new data sources like satellite imagery or something, I think that can be valuable. But I'm a little less excited about the opportunities for pricing of insurance policies. I think Doug Barton has a good question here in the Q&A that may be sort of more of the direction. So he's asking about parametric insurance. And so you can imagine the design of insurance products that pay people quickly and very efficiently based on being able to easily spot that they've had a loss, without involving a huge claims apparatus and other things. That's the idea of parametric insurance. So paying off because some external thing triggered and there's no scope for somebody to lie or sort of make the claim themselves. The challenge of those approaches is that, well, what if it doesn't actually pay you even though you had a loss? The more we can use like satellite data or other sensor data in ways that really clearly tell us, things embedded within your cars, sensors, and a whole range of things to automatically trigger that something has happened. I think those are some kind of interesting opportunities that are unique, more than finding ways of pricing an insurance policy.
Excellent. Well, again, thank you so much, Justin. Thank you so much, Danny. We really appreciate you sharing your expertise today. And thank you to everybody attending today's webinar. Before we end, I just wanted to let you know that CPED is ready to help your organization harness the power and insights of AI and predictive analytics. I'd love to set up a discovery session to talk with you or your colleagues about custom consulting, coaching, and professional development programs in digital transformation, strategy, org design, and change, and a lot more. My email is on the slide, and I look forward to further exploring all those opportunities with you and your organization. And with that, I will give you the rest of your day back. So thank you so much for joining us, and we'll see you soon.